This is a discussion about the accounting concept of revenue, and we're going to have this discussion in the context of service businesses. A service business is one that provides a service to the customers, and that's how they generate their revenue and profit. Here are some examples of simple service type businesses. The painter provides a service painting. The hairdresser provides the service hairdressing. The gardener provides the service of gardening. The electrician, the beautician, etc. Service businesses generate their revenue and hence help generate their profits by providing services to their customers. We're going to use the example of Annie the architect. She runs a business which provides advice to clients about architectural services. She is a service business. On the left is the income statement. It shows the revenue that was earned over this particular reporting period, which was July 2019. Annie calls her revenue consulting fees. She could call it a lot of other terms. She could call it takings, fees, service fees, architectural fees. She can call her revenue whatever she wants to. She's decided to call her revenue consulting fees. And over July, the reporting period, she has earned $10,000 revenue. What is revenue? A simple definition or explanation of revenue is the earnings of the business. The earnings of the business. It is revenue which is the activity which helps the business generate its profits. This business has generated $10,000 worth of revenue by providing advice to clients, and that has contributed to the net profit for the period, in this case $4,100. The revenue has helped the business generate profits. If you increase the revenue, of course, you will increase the profits. If you decrease the revenue, you will decrease the profits. So profit belongs to the owner. Profit will work to increase owner's equity. Profit will increase owner's equity, and this is shown by the little balance sheet extract where net profit is added to owner's equity to show the increase that's occurred to owner's equity over the particular reporting period. Here is a simple definition of revenue. Transactions that lead to an increase in owner's equity, excluding capital contribution. Transactions that lead to an increase in owner's equity, excluding capital contribution. Let's look at one example here. Consultation fees, that's the consultation or the fees done or the advice provided by the architect, and they've received $1,000 in revenue, $1,000 cash, because they have provided the service to the clients. Assets will go up by $1,000. And it also leads to an increase in owner's equity, $1,000, because the revenue activity has increased owner's equity. So transactions that lead to an increase in owner's equity, excluding capital contribution. And this example, the revenue activity, fits that definition. There was an increase in the asset, which led to an increase in owner's equity. A more comprehensive definition of revenue is provided, and that is an increase in an asset or a decrease in a liability that leads to an increase in owner's equity, excluding capital contribution. Let's use the same example and see whether or not it fits the more comprehensive definition of revenue. Consultation fees, $1,000. It certainly has led to an increase in assets. $1,000 worth of cash has been received. That increases assets. So it meets the first part of the definition, an increase in an asset. It also leads to an increase in owner's equity due to the revenue activity. So it meets the second part of the definition, which is it leads to an increase in owner's equity. It isn't a capital contribution, so it fulfills all the requirements of this particular definition. Come back and see video number 2.